Good morning, folks. Welcome to QuantSap. This is Vicky Sajnani. Let's get started with the morning brief. 17,789.57% up was Nifty futures. Nifty Bank futures 41,483.49% gains. Let's see where the SGX Nifty is pointing to, a 75-point gain. Again, as pointed out, that VIX is on the lower side, 16.60. So let's see how that pans out, especially with the VIX being on the lower side. That means the fear gauge is on the lower side. That's what it's pointing to. Looking at the charts, 17,800, 18,000, 18,300, thereabouts are the three resistance points as of now from the 17,735 closing basis. Supports being 17,500. Considering it's going to open at 17,835, so you can consider 17,800 as an important level on the lower side, and 17,500 happens to be a support zone. Other than that, 17,200 and 17,000. The futures data, as far as the OI is concerned, yesterday being the expiry, would show a little bit of profit booking or short covering or whatever. So we have seen some amount of short covering yesterday. So that's that. So prices have moved higher and open interest has dropped. Again, that is the expiry effect which has come into play in Nifty futures. So looking at the OI picture of options, we can see that the 3rd November options, 17,800 as I pointed out, and 18,000 on the higher side. On the lower side, we have some amount of concentration at around 17,800 and even at 600 levels. Looking at Bank Nifty, again, guess 41,500, 42,000 happen to be the two resistance points. Of course, 42,000 happens to be a strong litmus test for the counter. The index, banking index, supports being at around 41,000 and 40,500. Looking at the Bank Nifty charts, again, prices have gone up on the account of short covering. Looking at the OI picture, again, 41,500 as we pointed out, 42,000. These are the two major levels on the higher side, 41,000 on the lower side and 4,500. Top gainers, losers, RBL Bank, GMR Infra, JSW Steel are the top gainers. NMDC, Mindtree, Emphasis, top losers. Looking at the index contribution, essentially we are seeing, we observed 15 points gains from private banks, 17.75 gains from metals. Most of the sectors were in positive territory except NBFC, which shows minus 0.35 marginal negative nuance there. Looking at the build tops, auto ancillary, Bank Nifty stocks, cap goods, cement, all in the longs, IT on the short end. So let's see, MCX is one counter which is showing some traction. So one could consider there is a possibility that it could move higher, and major resistance is around 1611. So above 1550, I think the momentum could take it till the resistance level, and 1660 is the next major level. On the lower side, we have 1490 and 1439 or 1440 for that matter as the major supports. MCX again showing short covering there. Looking at the OI picture of options, so we are seeing some amount of unwinding in the 1500 call option. That's the litmus test, whether it's hovers above 1500 or not. So we could see some more amount of unwinding in that position as such. 1400 happens to be a strong support zone as far as the puts are concerned. Another counter is Sun Pharma. We could see positive momentum there. 971 happens to be a strong support zone. 869, the next major level. And on the higher side, 1100, 1140, and 1200 happen to be the resistance points for this counter. Looking at the OI picture, again, we are seeing open interest, strong open interest built up at around 1000. So that's some unwinding there. Could take it to higher trajectory as such. Major support zone at around 950 as per the puts. Again, we saw short covering there in Sun Pharma also. As far as the ban list is concerned, there are no stocks in ban list as of now. Before I wrap up the session, I would like to tell you that please consult your financial advisor and also follow strict stop losses while trading in derivatives. We observed long built up in auto ancillary bank nifty stocks. IT was on the short end. MCX and Sun Pharma are the two stocks which we recommended. And ban list, we didn't see any stocks. That's it from my side. Wish you happy trading and thank you.